This presentation is about the results of audits for the state public sector entities for 2014-15. In this report, we focus on those entities within the general government and public financial corporation sectors, including the state government departments, statutory bodies, government-owned corporations, and the entities they control, with a 30th of June 2015 balance date. The financial statements of most entities were timely, of good quality and reliable, except for some water boards which continue to struggle to meet legislative requirements. A number of key audit matters were raised during the financial statement process. Apart from the executive summary, the report is comprised of three main chapters. The context chapter identifies the entities that are subject to our audit, the financial reporting requirements, and our auditing responsibilities. The appendices to the report contain detailed information regarding individual agencies and financial information. I will provide a brief summary on each of the other chapters. Vendors no longer provide support for a number of Queensland Government finance and payroll systems, including the Department of Health's finance system and the lattice payroll system used by Queensland Fire and Emergency Services, Queensland Corrective Services, and the Queensland Ambulance Service. This increases the risk of systems being susceptible to malware, as fixes to protect against new forms of malicious software are no longer provided. In the event of a major system failure, it may not be possible to recover the system. The entities involved have started projects to replace these systems. Major organisational restructures and changes in strategic direction have affected the replacement of Lattice, with the project incurring a cost to date of $19.8 million over 5 years. Following the change in government in 2015, a new business case will need to be developed. This will increase costs and further delay replacement of the high-risk payroll system. We assessed other controls the affected agencies implemented to address potential system breakdowns, including network firewalls and disaster recovery plans. We concluded that the residual risk of material misstatement in 2014-15 for the affected agencies was low and did not result in a modification to the audit opinions we issued. The police, fire and emergency service portfolio has been under constant restructuring since the previous government started its public service renewal initiative. This portfolio has not been able to implement effective responses to these changes in a timely manner. The reconfiguration of financial systems only occurred in March 2015. This has affected the quality and timeliness of financial statement preparation and the effectiveness of monitoring performed by management. A number of these departmental financial statements have not met legislative deadlines for certification over the past 2 years. We examined the financial viability of Racing Queensland and found that their current financial position arose from unsustainable revenue and expenditure policies, together with temporary closures of 4 major racing facilities and race cancellations due to inclement weather. We issued an unmodified opinion on the 2014-15 financial statements based on assurances provided by the Treasurer for continuing financial support. We will continue to liaise with senior management regarding their intended restructuring and changes to operations with a view to improved financial sustainability. Non-current assets remain the most significant balances reported, which rely on management, judgment and estimation. They often require the involvement of experts to determine fair value. As a result, they are inherently more susceptible to error or manipulation. Clarification of the definition of residual value for infrastructure assets by the AASB resulted in the Department of Transport and Main Roads removing the residual value on road infrastructure assets from affected asset subcomponents. This resulted in adjustments to the 2013-14 reported balances, with additional depreciation expense of approximately $113 million recognised, and a restatement of property, plant and equipment, accumulated depreciation, and equity of $2 billion, which decreased the balances. In recent years, the Department of Transport and Main Roads has recognised significant reduction in asset values, largely associated with the difference between cost and fair value for recently completed complex construction projects. In 2014-15, the Department analysed 7 projects. They identified the current policy of applying greenfield, undeveloped land scenarios when calculating the gross replacement value as a contributing factor. The Department will review their valuation methodology in 2015-16. The contract for the Gold Coast 2018 Commonwealth Games Village was signed and the accounting treatment agreed during 2014-15. Construction of the venues and village progressed in accordance with expected timeframes and within the approved budget. Venue owners have progressively recorded work undertaken at the venues. The timeliness and accuracy of an entity's financial statements are measures of the quality of its financial reporting. The entity's processes for preparing financial statements need to be well planned and managed if they are to achieve cost-effective financial reporting that is timely and of a high quality. As at 31st of October 2015, we had issued 234 opinions out of a total of 271 financial statements requiring an audit opinion. This compared to 261 out of 309 opinions at the same time in 2014. We did not issue audit opinions on 80 entities in 2014-15 financial statements because they were dormant, foreign-based, or were included in the financial statements of another entity. We note 37 audit opinions remain outstanding as at the 31st of October. We issue disclaimers when we are unable to express an opinion as to whether financial statements comply with relevant accounting standards and legislative requirements. In 2014-15, we issued opinion disclaimers of financial statements for 11 water boards because they could not provide sufficient, appropriate evidence to support the non-current asset values they reported. We issued qualified audit opinions when parts of the financial statements do not comply with relevant accounting standards and legislative requirements, and we can explain these exceptions and their financial effect on our opinion. Such exceptions arise when we disagree with those authorising the statements about the accounting treatments they adopted because of conflict between applicable financial reporting frameworks or from a limitation on the audit scope that we consider is material to the financial report. We issued qualified audit opinions on the financial statements for 7 water boards because they lacked evidence to support their non-current asset values. We assessed all entities to determine the alignment of their processes against recognised better practice. Overall, the processes used in preparing financial statements were satisfactory. In 2014-15, out of the 167 financial statements certified, which has a legislative time frame, 119 met the requirement. Of the 21 core departments, 3 did not meet the 31st of August legislative deadline. These were the PSBA, the Queensland Police Service, and the Queensland Fire Emergency Services. Machinery of government changes required detailed analysis of the assets of the former Department of Community Safety. The movement of those assets and reconciliations in accounting terms was complex. Most financial transactions were processed and managed through interim arrangements, such as using the former department's SAP finance system. 41 financial statements for statutory bodies did not meet the 2-month legislative deadline for certification of their financial statements. River Improvement Trusts and Category 2 water authorities comprised 40 of these 41. In 2014-15, Management and Audit certified the financial statements of all 3 public financial corporations by the legislative deadline. The AASB issues standards with which entities in the public and private sectors of the Australian economy must comply. They issued AASB 1055 budgetary reporting in March 2013, and it was applied for the first time in 2014-15. This means that approved budgeted figures from the service delivery statement delivered by each portfolio minister to Parliament are now included in the financial report. The actual figures for the year are also included and compared to the budget, with any significant differences explained. We found general compliance across the sector and identified some improvements to the budget preparation process. In 2014-15, we worked with many of our larger clients to try and simplify the financial statements in an effort to reduce the size of the statements and make them easier for users to understand. We found that all entities have embraced the concept and virtually all have reduced the number of notes and pages in their report. Overall, entities in the general government and public financial corporations sectors continue to produce good quality and timely financial statements.